This is Rick Rule for Rule Investment Media, sponsors of the 2024 Natural Resources Investment Symposium. This year, held July 7 through 11, either live in Boca Raton or from the comfort and convenience of your own home via live stream. Understand that we will be giving you 60 hours of intensive programming over 4 days in Boca Raton, more than you can possibly absorb. To that end, all of the proceedings, including the breakout sessions, will be recorded, and you will have access to those recordings to visit time and again after the conference, which I encourage you to do. Further to that, we are interviewing every public company exhibitor and, frankly, every speaker before the conference so that you can use the 3 months before the conference to budget your time and your capital to use the conference more efficiently. Note, too, that unlike any other investment conference that I'm aware of, public company exhibitors at the Natural Resources Investment Symposium are invited and vetted. Specifically, no public company is invited to exhibit at our conference if they aren't owned in accounts owned and managed by the sponsors. That is at once a promise of quality to you and the disclosure of a conflict of interest. There's no guarantee, because we own a stock, that it goes up. But there is a guarantee that every single exhibitor at our conference has been vetted. Today, in an effort to further your understanding of what we're about, I'm interviewing an old acquaintance of mine, figuratively at least, one of long standing, Neil Woodyear. I remember Neil going back to his time at Endeavor Financial when I competed against him. I remember him, too, as the founder and CEO of Endeavor Mining, and now at Aris Mining. I prefer to be his shareholder rather than to be his competitor. Neil, thank you for your efforts on behalf of mining investors, particularly me, over the last 30 years. And thank you, too, for your sponsorship of the Natural Resources Investment Symposium.
And thank you, Rick. I appreciate being here.
So let's talk something about your background. Let's establish some credibility and figure out why people should care what you have to say. Tell us, first of all, about Endeavor Financial, what it was that you did in that incarnation, and then tell us about your migration away from the dark side over to Endeavor Mining and building a major mining company in Africa.
Well, okay, about 30-something years ago, I started an advisory company, Endeavor Financial. I'd been in New York for 10 years, working for Lloyds Bank and doing project finance and metal trading there. I started Endeavor Financial in Vancouver. We were advising companies on project finance and how to start financing mines. My first client was Clive Johnson. It was then Beamer, now, of course, B2. My second was Ian Telfer, who had a fairly amazing history through Goldcorp and is now actually my chairman. And my third was Serafino Iacono. I think that proves that the industry is relatively small and quite well knitted together. But about 25 years ago, I partnered up with Frank Giustra after his Yorkton days and his movie days, coming back into the mining side. And together we built Endeavor Financial as a public company, up to about $300 million of investments. In 2008, we started the year with 300,000. We were advisors on M&A, project finance, and equity. We were also investing in our clients. But that, if you recall, was a very, very bad year for the market. At the end of the year, we ended up with $100 million in our kitty. So as a public company, we'd actually lost 200. And of course, the reason was we couldn't sell our clients' position in a falling market as financial advisors. And we realized, whilst it may be a good business at certain times, it's not a good business in a falling market. So we decided we'd been involved in enough mining companies, startups, that we would do our own. So in 2009, we started Endeavor Mining. We converted Endeavor Financial into Endeavor Mining. We then looked where to start to invest to start a mining company. And we found there was an opportunity in Burkina Faso. And I wasn't too sure at that time where Burkina was, but I subsequently found out. And we bought about 65% of a mine. We subsequently increased our ownership. So we were now owning a mine in Burkina Faso. I think it was producing about 120,000 ounces a year. We then did a second deal in Ghana with an Australian company. We did a merger of equals. And not only did that bring in another mine, but it also brought in, most importantly, a management team because until then, we'd all had a financial background. We had no operating experience. What we were trying to do, and we succeeded in doing it through Endeavour Mining, was to build a company that was attractive to institutional investors. And to do that, we realized you had to have a portfolio of assets, good high quality assets, good mine life. And if you had a portfolio, you were then attractive because you had to stand out compared to other people looking for that investment dollar. So over a 6-year period, starting with one small mine, we built Endeavour Mining up through acquisitions to, I think we bought 5 mines, we built 2, and we sold 1. And then it was really time at that stage to move on, because our mentality was creation rather than management of an operating administrative entity. So we brought a strategic partner in and left, and of course Endeavour's gone from strength to strength since then. I was in my early 70s, so I decided it was time to retire. 3 days later, my wife suggested it was time for me to get a job, and Frank Juster phoned and said, why don't we do this again, but in Latin America? And that was the birth of Lear Gold. In Lear Gold, we acquired the Los Filos mine from Goldcorp. That was about 200,000 ounces. And we acquired 3 mines in Brazil. That was through a hostile takeover, but that's the kind of thing we did to grow the portfolio. And then we merged it with Equinox. And I must say, with the benefit of hindsight, and it's always good to have the benefit of hindsight, we probably did that deal too quickly. I probably should not have merged the company then. I should let it grow more. So Aris actually means in Celtic, again, and that is exactly what we're doing. We're doing it again now with Aris Mining. We started 3 years ago. We now have 2 operating mines in Colombia. Last year, we produced about 220,000 ounces. We had a trailing EBITDA of 150 million, so we're generating cash. And now our principal objective is to grow the company. So what we're doing is we're investing $300 million in our present 2 mines to take them over the next couple of years or so to 500,000. So that's the stage we're in now. It's the business we're envisaging creating this kind of mining company. It's a 5 to 6 to 7 year time horizon. We're in about year 3. And if I look at the quality of the assets we have today compared with the quality of the previous 2 times, these are very, very good assets. They're long life and they're high grade assets. So we're very comfortable with where we've got to in the last 3 years.
Give us a bit more information, if you will, on the 2 producing assets, and then 2, give us some information on your project pipeline, which is, from my point of view, particularly attractive.
Okay, well, the first 2 mines, the first we acquired was Marmato, which is a small mine producing about 25,000 ounces a year, very high grade, not exactly economic, but it has a very large deposit underneath it, which we now have the license to construct, and we started construction about 6 months ago. So that will produce about 170, 180,000 ounces a year. And the mine life is actually 20 years because of the reserve base that we have there. So that one was our first asset. The next thing we did was acquire an interest in the Soto Norte project, about 20% interest. If I may, I'll come back to that. But we did that because we could see the attractiveness of buying the Segovia mine, which was owned by Gran Colombia. It's a mine that's been operating for many years. It's a high-grade mine, 11-gram material. It is a unique position because 40% of it comes from our small mining partners' production, which gives you tremendous strength. So we could see this as a very, very good cash-flowing asset. We could also see it had an environmental and social system that we could use elsewhere to increase our social license in Colombia. So it's a very attractive asset. But to be able to do it with just our ownership of the small mine Marmato, we had to bulk up. So Soto Norte was the way of bulking up. And then we went to Gran Colombia and said, let's merge the 2 companies. We did just a year or so ago, which gave us the 250,000, 220,000 ounces we're producing now. And we're also expanding Segovia. It produces 200,000 ounces a year to 300,000 ounces. So our $300 million covers both mines and gets us to 500,000.
So before we go into Marmato, by the way, I've been to Marmato. It's a fascinating place for a variety of reasons. But before we go into Marmato, talk to me about what you've built so far, what sort of cash you generate from it, and what your market cap is relative to your ability to generate cash from these long-lived mines.
Well, our trailing EBITDA is 150 million US. And if you look at where we're going, doubling our production, theoretically, we ought to be at least doubling our cash flow. So we're talking of 300 million forecasted EBITDA in a couple of years' time. A market cap, 750, 800 million Canadian. If you look at any other comparison, we are extremely undervalued. If you look at the reasons for that, and I wish we knew all the answers, but certainly people don't understand Colombia, which I think is an absolutely amazing opportunity for a gold mining company. People don't understand Colombia. They also have seen just a small mine. We have to perform. We have to get that expansion done. And I think as we do that and as we grow the asset base, I think shareholders will start supporting us. We've been through these early baby stages before at Endeavour, and we've been through the same thing at Lake Gold. You have to build credibility. You have to do what you're saying. You have to demonstrate the assets, and you have to demonstrate the cash flow. We're on that course, and as I say, I'm happy where we are in year 3 on that track.
It's important that our viewers understand that there's a reasonable amount of documentation in your existing filings with regards to the economics, both of Soto Norte, and you should probably talk about the history of that deposit, and also Marmato. When you talk about the mineral endowment at Marmato, it's truly mind-boggling. I understand that you need to consultate the whole district perhaps to get access to it, but it's mind-boggling. So if you could talk a bit more about what is available for investors to see in terms of the documentation of net present values of those deposits going forward.
Well, I think both Marmato has a full 4301, a full feasibility study that was done just some months ago, which gave us the input we needed to get the license. We're now fully licensed, fully permitted, and we're fully financed to spend the 280 million that we're now spending on Marmato to bring it up from the small mine of 25 million to the 170, 180 level. I think it's important to know that the small mine will continue, but it is more appropriate for us to hand that over to small miners. What we found at Segovia, as I say, 40%, 45% of the production came from small miners. In Colombia, there are about 350,000 small miners. They actually account for about 80% of the production of the country. So small miners is a way of life. They've been mining at Marmato for 450 years, but they have never had their own tenements. So we introduced, followed on a scheme that had been used at Segovia. We introduced a group of small miners, formalized them legally, worked with the ministry to get them formalized. They are now working with our own tenement. They're now working with our infrastructure in the small mine. They are capable of getting, operating in a smaller area. They have tremendous support from the community. They understand the area. If we can combine with them our industrial skills, our industrial practices, our compliance, our health and safety, our capital base, if we can combine and work with these small miners, we form a very, very solid partnership that is totally acceptable in the communities. It is profitable to us. If you look at the small miners at the moment in Colombia, they're producing gold mainly through illegal operations of mercury and cyanide. Rivers are absolutely destroyed by them. But economically, they're only getting about a 45% recovery rate. We get 90, 95%. So there's a vast amount of dollars that are left on the ground. If we can work with them, give them our recovery processes, clean up their environmental mishaps, and at the same time generate more money, we are much stronger as a company. We have a much better cash flow. We have a much better acceptability in the country. And that's what we're doing. We're doing this following on from Segovia, converting these things into partners. We have 12,000 families dependent upon us now, paying tax with bank accounts, receiving Social Security. This is enormous in these mining areas because each of our mines is in a strong mining area with hundreds of years of history, very poor operations. If we can combine our strengths, which is what we're doing, we also help us at places like Sote Norte. Sote Norte was a project put together a few years ago, essentially brought together by Ike Batista. It's one of the largest underground mining deposits in Latin America, a real tier one asset. He drew a circle around it. He wanted as big a mine as possible. Mubadala lent him, I think it was about 1.2 billion. They ended up owning the mine, or owning the project. We partnered with them 2 years ago. We bought 20% with the right to go to 50%. We took over the management of it, to say, about 2 years ago. And we realized that we were actually the first operating mining company to actually be involved in this project. And we also realized that size on a project didn't matter. We've looked at the economics, we've studied it, and come to the conclusion that a much smaller mine is the right way to go from a mining company. We manage the construction, we manage the operating risk, and if we are selective in how we mine it and really think it through, we can get a better return from a smaller mine, half the size, because the original mine was envisaged to be 450,000 ounces a year. We're thinking more about 250. Not only do we get a more manageable, a more realistic mine, we can build it up in the future, but we also get a mine that has a smaller environmental footprint and has a very, very strong backing from the local communities. And that's what we're following now. And about 2 weeks ago, we did a deal with Mubadala, where we now own 50% of the mine, 51%, and we'll continue to operate. And we'll now be designing and building a much smaller mine, but a much more viable mine and a much more acceptable mine in the community. So that's where we're going. We're improving the assets we have, acquiring other assets to give us that portfolio.
So, Neil, to the extent that our audience is interested in a company that's selling at, say, 2.5 times forward EBITDA with 20-year mine lives, backed by somebody who has done this before twice, you can tell, I think they should be interested. How do our attendees find out more about the company before the conference in anticipation of visiting you at the conference? Who in particular should they direct their inquiries to, and how might they find that person?
Okay, I think there's two things. I think our website, I'm not very good at rolling out the statistics. I much prefer to think and talk about the strategies as I've tried to do now. The statistics are all available on our website. If you want to talk about the business and get a better understanding, then I'm definitely the right person to talk to. I'd love to talk to anybody who wants to talk about the business. To get hold of me is very simple. I have an email account. It's just nwoodier@aris-mining.com. That gets me. It's with me 24 hours a day, so no problem at all in getting hold of me. If I need to bring either other members of my team in, Richard, the Chief Operating Officer, or Oliver, our Head of Capital Markets, no problem at all. We can discuss the company. I would love the opportunity to explain what we're doing and why.
That's the right answer, ladies and gentlemen. The buck stops with the boss, the guy who's done it before, the guy who's doing it now. You want to learn more about Aris Mining, and you should, contact Neil directly. Neil, thank you for decades of effort on behalf of mining investors, again, primarily myself. And thank you, too, for your support of the Natural Resources Investment Symposium. I look forward to hosting you in Boca Raton.
Thank you very much, Rick. I look forward to seeing you in Boca Raton. Thank you very much.